Hey, this is Steve with the Malone Realty Group here at EXP in Atlanta. So today, what we like to do is we like to talk about what's going on in the market as far as lending and as far as getting a pre-approval and kind of getting that financial piece ready. And I've got the best in the business with me today, Miss Sandy Hill from Fairway Independent Mortgage. Sandy, how you doing? Happy New Year.
Steve, Happy New Year. I'm doing fabulous. How are you?
Doing very good. Very good. Santa was very good to everybody here. We had a good New Year's, so now it is the New Year. So
It is.
let's
Time
talk
to buy
about
some homes.
absolutely. So let's talk about what's going on in the world of high finance, so to speak, or lending. So coming
Okay.
out of 2021, we had the rates. It seemed like in 2021 they kind of wobbled a lot.
Yeah.
Like, what was your impression of like where did we end the year as far as the rates go? Like, how did the trajectory go the entire year? Where did we end?
So we ended up in the mid threes, Steve. Prior to that, in 2019, 2020, we were in the sub three category.
Right.
But we moved into the threes, and it was kind of a gradual increase over the year. And we had, as you said, the dips and the spikes. However, we ended up in December at the high for the year.
Right.
And going into 2022, I think we're going to see the same thing based on where we are with inflation. I mean, Chairman Powell has already said we're probably going to see as many as 3 rate hikes. So that translates in the mortgage industry to those rates going up.
Right.
But
yeah, it's not a direct correlation, but I mean, it just the rising tide just kind of everything goes up. So this is one of those things.
Exactly. So forecasts are really that it could land somewhere by the end of 22 between 4 and 4.25.
Wow.
Obviously, everything is speculation, just like we don't know what the stock market's doing. We really don't know where those rates will end up. But I think the key point for everyone to know is that rates aren't going down. Don't sit on the fence waiting for something to drop again. I think the reality is we're going to see them rise, which will take away more of their buying power.
Right.
So don't wait. Go ahead and see what you can afford.
Right.
Go ahead and get prepared.
And then you combine that with the fact that the prices are going to be going up. I mean, prices went up
Exactly.
15 to 20% last year. Probably not as steep this year, but I mean, they're going to go up at least, I'd say, another 5 to 10 at least percent.
Yes.
So you're talking about having a more expensive house with a much higher interest rate.
Correct.
So
Correct.
that's thousands and thousands and thousands of dollars over the life of the loan. So yeah.
It really is.
Yeah. So let's get it done now. So what are your recommendations? If somebody's sitting and thinking about, all right, it's time to get the ball rolling, what are your recommendations for somebody if they were looking to get a loan and get the ball rolling?
Okay, so the very first thing they need to do is sit down and take that snapshot of where their financial picture is now. Right. So definitely find out what your buying power is. Secondly, establish your budget and don't go above that budget. We're in a market where we're seeing the prices may go up 10, 20, 30,000 and folks say, well, yeah, that's more than I want to pay. But at the end of the day, we don't want them being house poor. We don't want them being uncomfortable.
Right.
And then they have to go ahead and start finding out what is that number for the down payment so they can start saving. If they find out and have that snapshot, then we can develop a plan, whether that's saving paycheck to paycheck, whether that's getting gift funds, whether that's borrowing from their 401k. Let's find out where that down payment's coming from so we can find out the best program for them.
Okay.
And the fourth thing that I think is imperative is borrowers need to work with a seasoned realtor, such as the famous Mr. Steve Malone.
I'm at this.
And then secondly, they need to work with a seasoned loan officer because the market is changing. The programs are changing. The guidelines change daily or weekly. So they really need to know where they stand and be able to count on what that number is for what they can afford.
And a lot of that is, they got to call somebody and say, where are we? And then
Exactly.
having a local lender who knows what they're doing, like yourself, we can get you on the phone. You're there every single day.
Mhm.
And they're not a number; they're a human being that you're working with. That's the thing I love about working with you. That's why local lenders, I think, have that inside track on helping people. You know,
I agree.
we were talking earlier. I mean, we had a deal at the end of the year where it was a multiple offer situation, and the fact that we went and because you have a seasoned agent who knows how to work with the agent and figure out what's best for the seller, and then
Mhm.
you have a seasoned um, you know lender that's local that knows it. I think that just that alone helped us to secure that deal for our people. So yeah, it's very
I
important.
agree. I
Right?
agree.
The world famous part, I don't know, but I'll agree.
Now I'm giving you that label.
Well,
Yeah.
I appreciate it. I'll take it. I'll take it. So the other thing was, I know that you have different programs that come out from time to time through Fairway, and
Mhm.
we were just talking. You don't hear a whole lot about ARMS,
Mhm.
but it sounds like they might be making a comeback with the rates going up. Is that right?
Absolutely. What happens is when the fixed rate starts to rise, then there becomes a supply and demand. And the adjustables that have lower start rates, lower qualifying rates, they will start to become a little bit more popular. So as we start moving into the 4, 4 and a quarter, 4.5, if you have an adjustable that has a start rate closer to the low threes or even in the twos,
Mhm.
and there are also buy downs that you get into. We used to have buy down programs in the 90s for people to be able to qualify. We're going to see that start to become more popular in the market. And up until now, with fixed rates so low, there wasn't a need for an adjustable.
Right.
So the secondary market did not price it well. In fact, ARMs were higher than fixed rates. But we're going to see, I think we're going to, January first quarter into the second quarter, as we start getting up into the upper threes, we may see that variable of having an adjustable that may be 3/4 to a point lower than the fixed rate, which will again open the door for more buyers. Yeah.
Very interesting. Yeah, we haven't had to do that in a long,
We
long.
haven't. We haven't. But the other point is that most folks only stay in their home 5 years. We know that's the historic average, right?
Right.
So adjustables, we have the hybrid adjustables that can be fixed for 3 years, 5 years, 7 years. So the exposure and the risk factor, if in fact we move to an adjustable and it's fixed for 3 years or 5 years, it's really nominal. It's a good option for buyers. And that's what we'll take a look at.
Well, there you go. Very good. All right. So, Miss Sandy, if somebody want to get a hold of you to talk about, kind of get the ball rolling on a loan, get the ball rolling on getting that house purchase ready, where should they call? What number?
They should call me at 678-713-3636.
Okay. And then best website?
sandyhillfairway.com.
There you go. There
Easy
you go.
peasy.
And then you can also email me, steve@malonerealtygroup.com. Sandy is my preferred lender. I always have all my people talk to her. And I've had my family work with her. I've worked with her. Sandy's the best in the business. And we're going to get some stuff done in 2022. Sandy, Happy New Year. Thank you so much for your time.
Happy New Year to you, Steve. It's my pleasure.
All right. Bye, y'all. Hey, thanks for watching the video today. If you want more information on what's going on in the real estate market, take a look at some of these videos over here that we've posted, keeping up with what buying, selling, things that are going on in the North Georgia market. But if you want to keep up with everything that we post to our YouTube channel, be sure to subscribe to the YouTube channel down there, bottom right. That way you won't miss out on anything.